Hi, Akhona. Hi, Christopher. And thank you for joining me on this panel. Unfortunately, the lovely Danielle from Fintech Association was unable to join us today, so you got me. All right. I don't know if it's a good thing, but anyway, all right. Okay. So I don't know how we're going to beat Amrita's talk, because I was feeling a lot better after, with the last couple of days when we've been talking about the threats in open banking and the way things are moving and in transformation in banking, you're finding that, you're getting really nervous because you keep hearing about how things can go wrong, right? So it's kind of really, nice to hear okay, that we are putting things in place and that's available to us, right? So now the next big threat to banks and traditional banking, good old fintechs, okay? All right. So Akhona is from Liberty, and Christopher is from Bamboo. And yes, Bamboo is legal in South Africa. Okay, look it up. It's one of the biggest questions on Google. All right. And what I would like to start with after looking at our agenda is it's always about fintech versus banking. What are you doing and all the things that you're doing in the market that's actually either a threat to them or disrupting the way that they do things. And then on the other side of it, we hear about what fintechs are doing, all right, to bank the unseen, to have financial inclusivity and all of that sort of stuff, right? Okay, and then from the other aspect as well, right, the sharing of data then allows for things like KYC and onboarding and seamless customer experiences. So coming back to that question then, what are the threats to traditional banking that fintech poses? Are there actually any?
Cool, can you hear me? Great. So I think, I'm going to answer the question, but I'm going to add to the question as well. And in answering the question, I think we need to look at banking in its entirety and actually focus on the parts of banking that are really being disrupted. And with the disruptions, they started predominantly with payments. It's not just fintechs playing in that space. You've also got big techs and telcos and retailers also playing in that space. But I think for the purposes of this conversation, let's talk about fintech. So with fintech, what they've brought in is really enhanced customer experience. They have exploited the mobile device, which is something that generally people have access to. So then they're also solving for accessibility. They're solving for user experience. And also they're solving for costs. And also at the moment, the one advantage which fintechs have over and above traditional banks is the fact that regulation, because technology evolves faster than regulation, they have the regulatory advantage where they are just operating, but there are no, bureaucratic kind of barriers that they have to overcome. In terms of threat, I don't think so. And we can unpack this later. I think there's definitely more of a collaboration opportunity. We've been having this fintech discussion for about 10 years. And I think when they first came up, they were perceived as a threat. But not to answer any questions that might come up, hopefully we'll unpack it later. I do not think that fintechs at all are a threat. But I don't know, Christopher might have different views.
Christopher, don't look so nervous. He's our rose amongst the thorns here, and I think he looks like we're about to eat him or something.
Thank you. So I don't think fintechs pose a threat. I think there's been collaboration from day one between fintechs and banks. It's just a lot of individuals, a lot of us are just oblivious to how many fintechs actually work with banks out here. More often than not, you have fintechs powering systems for banks, and perhaps the branding is not the best, or perhaps fintechs don't gain any visibility. A lot of banks in South Africa use a major fintech, for example, for payments. Fintech is out in Cape Town. A lot of you know that fintech. I'm not going to call their name right here. But what I'm trying to make people understand is, at the end of the day, I see a lot of collaboration. I don't really see competition as much, because I don't think you can compete with the banks. They're huge. They have the capital, they have everything, they have the licenses, they have you name it. I think fintechs, what they try to do is perhaps just power, like she mentioned, just power a little segment of what the banks actually do. Is it payments? Is it KYC, for example? What exactly do you need? Is it loan recovery? You have fintechs that are able to actually help banks do that or achieve that specific objective.
Okay, then in that the case, let's turn the whole thing on its head, right? So rather than focusing on what we can't do and where we're competing with each other, the challenge then would be, and the opportunity perhaps is, how can banks and fintechs collaborate successfully? And what is a way forward that, we don't have this age-old, werewolves versus, the vampire scenario?
Can I go first?
Yeah.
So, interestingly, I think there are synergies that exist, right? So, as I mentioned earlier, technology tends to evolve faster than regulation. So, you've got fintechs that provide a really good customer experience. They are able to move and pivot because they don't have age-old systems that they have to navigate. So, sans bureaucracy. They are super innovative. That's something that they bring to the table. And they experiment with different types of technologies, right? So you've got this on that side. But the thing with fintechs, in order for them to be sustainable, they require a lot of resourcing, and they require a lot of scalability, and they require a lot of funding.
Yeah.
And then this is when the opportunity comes with banks. So banks haven't transformed as rapidly as fintechs from a user experience. I think that's a really good case study. They haven't advanced so much as fintechs with regards to accessibility from a mobile perspective. Not necessarily app building, but just mobile technology. So then you've got that. And then on the other side, you've got banks which have got the distribution channels, they've got the scale, they've got the pockets that fintechs need. So then, if you're trying to increase market share, you're looking at accessibility, you're looking at user experience. If you're not, harboring those factors efficiently, what do? You partner with fintechs. So this is where we see a lot of the collaboration happening, is actually fintechs, right, are empowering banks to generate new markets, generate new revenues, accessibility, and fintechs are benefiting from banks from a distribution perspective, a funding perspective, and a scalability perspective.
So if that's the case, then are we talking about fintechs are another channel for banks to leverage off? So if you're talking about a sales or a customer channel, you actually created one through the fintechs. And then they can also take something that is usually exposed only to a small subset of people who are in that, your customers for that bank specifically, take components of it and then actually, shall we say, customize it. So you only want certain aspects, like a payment, then what comes out of it? You get payment, buy now, pay later, payments, Momo, money wallets, all of that sort of stuff start happening, all right? But it's only the bits and pieces that people need. And is it then almost like a marriage that takes place where customers now have a choice? If I go to a traditional bank, I can go and get my home loan, all right? But if I want to use something else from one of the other fintechs in terms of managing my budget, for example, being able to use the transactional information to get, like better financial skills, all right? Would you see that as a way of doing it?
Yes, I think personally, or I believe some banks in Africa have cracked that already. So if you look at EcoBank, for example, they have a fintech challenge every year that is launched, and they get a lot of fintechs, and these fintechs launch in some sort of sandbox environment, and they invest in some of these fintechs. I know other banks across Africa that are doing the same. A lot of banks are starting to create fintech divisions, and they have different mandates. Speaking to a bank in Ghana yesterday, and their fintech division actually goes out there and purchases other fintechs or buys out other fintechs to actually expand, across Africa in a completely different way under a completely different brand. So when it comes to collaboration, I think obviously, if you're a bank and you don't have that fintech wing, right? In order to enhance collaboration with fintechs, for example, speed is a serious issue. So I work for Bamboo Invest. We are a US licensed broker dealer, so we offer you access to the US stock market, very easy and affordable. And basically, we've partnered with a couple of banks across Africa, but strange enough, the banks we've partnered with are neobanks, right? And that's because they're quick to move. So right now we're speaking to a good number of other huge banks, but it's moving slowly. I was in a meeting yesterday and we we're speaking to the tech board of a big bank in Ghana, and they conditionally approved our solution because there's a document they need us to provide, right? This was not going to happen if it was a neobank or maybe a digital bank. So that's the difference. Generally, there is bureaucracy, like Akhona mentioned, but then also there's speed, which is very important. So I think when banks get to a point where they have some sort of fintech division that goes as quickly as other fintechs out here, we're going to see more rapid partnerships happening across the continent.
Just add something just on collaboration. Is this on? Can you hear me? Yeah. So I also think it's, so I'm actually from life insurance. We have also recently been acquired by Standard Bank. So I mean, I think speaking from a life space, right? You also need to look at customer preference. But I mean, this is also applicable to banking as well. So I mean, with banking, you've got private bankers, life insurance, we've got financial advisors. And really in looking at customer preference, actually some customers are actually quite comfortable doing things the old-fashioned way, speaking to a broker, speaking to an FA, speaking to a private banker. And I guess another kind of like collaboration opportunity is the fact that, you know, you get the, I'd say probably more millennials and Gen Zs who are probably more digital savvy. So then there's also that you're almost giving more choice, you know, for customers. You're not completely, you know, overriding your traditional services with a digital, and you're still able to support the customers that actually prefer the brick and mortar kind of like face-to-face interaction. And then, you know, you're also able to support those who'd actually prefer working with you through a technology channel.
So what you're basically saying is that if it was, it is realistic, it is possible, it has been done, it is happening as we speak. Now, I can think of, just off the top of my head, being in South Africa, Capitec and Oza, for example, with the Capitec Pay. Oza had already got their payment channel and they were happily doing the instant EFT, but Capitec has gone and joined in with them for, so that it's instant. All right, okay. What, besides EcoBank, what other ones can you tell us about where you've seen success and when they've worked together?
So they're a good number, to be honest. So I'm just going to quote an old adage that I came across, I think a couple of years, and it says that every fintech founder dreams of owning a bank license, and every bank CEO dreams of a working app. So they all have different problems. So the fintech founder aims to have a banking license, and you know the bank CEO thinks of having an app that works. I can relate because originally I'm from Cameroon, so very different part of Africa, and all bank apps are rubbish. Excuse my French. And these are huge banks. I'm talking about Eco Banks. Hopefully they're not in the room. I'm talking about UBA. All these apps are the worst. Perhaps in South Africa, apps do work, of course, but my part of the world, they do not work. So
I don't know why people are laughing. I think maybe they're agreeing with you on that.
So there are different problems on both ends of the spectrum that we are trying to solve for. In terms of partnerships across Africa, there's so many. I could think of perhaps EcoBank, another example would be EcoBank and Jumo. So Jumo is a popular South African fintech credit scoring giant. I think they're a competitor to FICO in Africa. And they actually partnered in Ghana to issue out microloans via mobile money. They did exceptionally well. I think the initial loan book was about $10 million. And these loans were repaid, you know, by mobile money merchants, and they made a lot of profit on that. So I could think about other banks such as Standard Bank, for example, with Nomanini back in the day when they launched a supply chain finance solution across Africa. So there are a good number of examples. The only issue is, like I mentioned, a lot of people do not know about them. But yeah, fintechs do work with banks a lot. Yeah.
To that, I mean, I think another something else that tends to happen is that the fintechs do get absorbed by the bank. So I do want to agree with what Christopher's saying. I mean, the two that I'd like to chat about would exist within my ecosystem, being a part of Liberty. So we actually have an investment platform called Stash, where you're able to save towards your retirement, but like really in quick and easy, kind of like 60 increments, 10 rands, 20 rands, you're able to save, and it's quick and easy. We're starting to now that we've built Stash, we've got like a sizable database, right? Now the question starts, how then do we start cross-collaborating, not only with Liberty, but how do we cross-collaborate Stash, integrate it to, reward solutions as well, but also integrate with SBG, from like a leads perspective, from, selling quick and easy, like non-underwritten products, et cetera, et cetera. So those opportunities do exist, and we're starting to experiment with those. I mean, another one also keeping within the family. I mean, you did mention Standard Bank, but also Standard Bank and SnapScan, where SnapScan has a little bit more visibility probably than Stash, but that is a match kind of like made in heaven, where you've got like one quick, easy platform, to make payments that is integrated with the bank.
Super. Okay. Any questions so far? Okay. Any examples? Right. Okay. So let's talk then about digitization, because that's what fintechs do. Sorry? Oh. Okay. It must be one that we know the answer to, okay?
So I just want to say to Christopher first, thank you for mentioning the EcoBank FinTech Challenge. So we participated in that this year. There was 1,550 companies were in the top 40. And we are a South African-based digital wallet, right? And at the top of Africa, you've got that going on because that is happening in Nigeria, but you don't have it happening in the SADC region. So you have EcoBank supporting fintechs and coming all the way down here to pick up fintechs, but we don't see it in South Africa. Right now, our platform is on an Access Bank platform. They offer their platform for us, but it's a Nigerian bank. You don't see it down here in Africa. So a South African fintech has to go all the way up to the north to look for a bank to partner with, but you don't find it in South Africa. And then to Akhona, I was a financial advisor previously. I worked for Sanlam, then I worked for Liberty. We tried to get a distribution channel where we build an app to provide people with insurance and funeral policies and all that. But these companies will not provide their API, an open API or access to their bank. They are comfortable with you being a financial advisor, filling out forms and doing that for them because that's the distribution channel that they want, that they're comfortable with, but they won't open up to you. So the landscape is quite different in the north and in the south. And my question is, maybe if they're banking people within South Africa, yesterday there was FNB somewhere, is there a reason why in Southern Africa the banks feel that they want to do it themselves? Because we see them, you mentioned an app by Liberty, which we think should have been a fintech app. They want to build the apps themselves. They are not giving the platform or partnering with fintechs. Do you think that fintech association we could see what's happening in Nigeria and the fintechs that are growing in Nigeria start happening in the SADC region? Thank you.
So I think firstly, EcoBank has bought into NetBank or the reverse, right? So we're gonna get a lot more EcoBank in South Africa or in Southern Africa. So hopefully there could be more fintech challenges for fintechs in this region. Yeah, let's hope that's gonna happen. So I think the reason fintechs are very prevalent in my side of Africa compared to South Africa is because of advancement, so technological advancement, to be honest. South Africa is rife with competition when it comes to advancement. The banks are already there. So I was speaking to the head of growth at Time Bank yesterday, and he gave me a shocking statistic. Apparently, there are only about 2 million people in South Africa that don't own bank accounts. So think about it. If there are about 65 million people in South Africa, 63 million of them own bank accounts. That means if you come you come in South Africa as a fintech and you're trying to crack the market, you have a tough market to crack. And that's totally different to where I'm from. West Africa, Central Africa, a lot of people do not own bank accounts. That's why mobile money is so prevalent. Yeah, so in terms of your question, competition. I think there's a lot of competition when it comes to the banks. They are super, super advanced. So if you're trying to launch a solution in South Africa, to be honest, you find it harder to crack the market here than you would in a country that's a little bit more similar but less advanced, such as maybe Nigeria or Cameroon or Senegal. Yeah.
I think maybe if I can also add, I mean, just to answer your first question, in my environment, with regards to why are banks wanting to do it themselves as opposed to partnering with fintechs? Remember, banks are still trying to sense it. I mean, we're having these discussions, but these are almost like forward-thinking discussions, and banks may not necessarily be where we are in terms of exploring fintech. I'm not saying that they're not. I'm saying that they may not be as, what's the word, as daring or as adventurous. I think there's that. So they still need to, sensitize, still need to realize that fintechs are actually more of a collaboration opportunity. But I think where I am, a lot of the deadlocks come with regulation. And we're still trying to also like navigate, data protection, data sharing. We're trying to navigate POPI. We're trying to figure it out. And we're trying to, protect the data that we have and figure out actually how we can collaborate on data within the constraints of regulation and, such as POPI. So I think that's, in my world, that's usually the biggest hindrance in terms of partnerships. And then to your second question, with regards to insurance, insurance is a very complex market in the fact that it's disintermediated. And remember, a lot of our revenue, it's almost like a B2B2C company, and you've got these advisors in the middle who really do have a lot of power within the markets because technically the clients are their clients. So, when we want to scale or explore like a digital solution, if you don't get buy-in from an advisor who will not get commission from it or might view it as a threat, then it becomes a bit, not so fertile ground. So, I mean, these are issues that we're working with and we are working around, but they just, two constraints that we tend to see a lot within the space that I work in.
Can I repeat that? So then what's your take on a Nigerian bank that then comes to partner with South African fintechs, which is now a gap that is being filled by, which is a gap that should have been filled by a South African bank, but now being filled by a Nigerian bank?
Yeah, so I think maybe the first question would be the solution you offer, does the South African bank need it? I think that's where we should start, right? Because like I mentioned, they do have these solutions already, a lot of them. If a Nigerian bank can extend its services to South Africa and partner with fintechs, I think personally to me it's great. I'm very Pan-African, so I'm not going to go into politics, talking about borderless Africa and all the likes. But I think we're going to get to a point in Africa where it wouldn't really matter who's partnering with who or what country is partnering with what country. So I look at it as one continent. Definitely, we need to solve for payments across the continent. Totally different conversation, but I think collaboration should be, across the board, from Egypt all the way to South Africa.
You want to add anything, Akhona?
Thank you. A follow-up question to Akhona. I'm here. Follow-up question in regards to the Stash app that you have, and you mentioned that you need a buy-in from the advisors. I'm speaking from the advisory space. Is there a portion where, or a part where, when a client has got enough funds on the Stash, the information now becomes vice versa? Now, Stash has to inform the advisor that here is a potential client, there is so much amount, now you can continue and give a customized advised. So we as Stash, we could only maybe accumulate 300,000 or 500,000, but now this person needs an undivided attention for advice. Since when you do it first part, the advisor doesn't get any commission. Now, when it's vice versa, wouldn't that be maybe a way forward?
I mean, I think that's a great question and something that happy to feed it back to the team. So the purposes of Stash, actually, it was created as a saving solution. So think Satrix, not Satrix, sorry. But basically an app that you use to save for retirement. So it's a retirement savings app. That's the initial thinking of what Stash is. But then obviously due to its user friendliness, it has evolved to something that is more transactional. So people use it to save for events. However, there is that, implication where now you start digging into the tax-free savings, the lifetime tax-free savings that you actually allowed as an individual. And then you start eating into that. So basically, the question then becomes, then how do we almost like evolve? The intention was X, but it's evolved into Y. And how then do we cater for that? How do we change the app into something that's maybe a little bit more general? So, I mean, I can't really speak to that because I think it's a great question. I really think it's a great question. I think it's a bit difficult for me to speak to that because the function of Stash is not to withdraw the money. It's more to keep it in. So then it wouldn't be like a digital F&A for other opportunities. I'm not sure if I'm answering the question. However, I think it is a really good question, and I think it really feeds into our need to start thinking of how we can actually evolve the app to something that is more transactional.
Okay, coming back to the original question about barriers to entry and regulation, and always come back to regulation. Around that, we have PSD2, for example, in Europe. The UK FCA looks after theirs in terms of the way fintechs share data with banks. Then we've also got the Irish government have put regulations into place for Ireland. Now Nigeria has got regulations that have been put into place to share data with fintechs. And South Africa, I think we've only got it around payments at the moment. Do you think that the absence of these regulations is perhaps one of the reasons why they are so reluctant to, collaborate as quickly as with fintechs?
I'd say yes and no, maybe. The reason I say that is because in the past I worked for regulators. I have a finance background, I'm an economist, worked for a central bank in Central Africa. And to be honest, at the time when I worked there, I was part of the team that came up with some sort of fintech regulation for fintechs in country. So we didn't have one. So think about it, 6 African countries governed by one central bank with no regulation on fintech. So you could launch whatever it is that you want to launch and just fly away with it. We had a lot of people do that, come up with Ponzi schemes, crypto-backed Ponzi schemes, you name it. So regulation has helped, right? Collaboration, but also the absence of regulation has helped fintechs grow. I think you regulate, like a professor of mine used to say, you regulate how the technology is used and not the technology itself. So what a lot of regulators do is they struggle with regulating how the technology is used and they're trying to restrict the technology. If the aim of payments is to transfer, let's say 50 rands from here to South Africa to Cairo, for example, you can't say no, the payment is going to stop in Nairobi. It doesn't make sense because the aim is for it to go all the way. So you can regulate how it's used, but not the technology itself. So I'd say yes or no, it's helped and also it's hindered a lot of partnerships.
I mean, I think just to add to that, to Christopher's point, I think the absence of regulation would actually encourage more fintech because you've got absolutely nothing holding you back and no one can come down on you if you haven't had a regulation in place. And also, I really agree with his point where you can't regulate a technology, you regulate how it's used. And really, with regulation, there's a lot of gray areas. And I think that's where we like the gray areas because we can almost like use them to our benefit or to our advantage in terms of what we can do or what we can't do. So I wouldn't say that the absence of regulation is why we don't have a lot of fintech partnerships in South Africa. In my world, it really is what we're trying to solve for now is we've got this data, we want to collaborate. How do we collaborate this given the POPIA GDPR kind of like constraints? That's in my world.
Okay. Now, if we're going to talk about true digitization, all right, we've been talking about apps. Stash is an app, right? Okay, it was developed for one thing. It's now X became Y. All right, what does that actually mean in a fintech world? What do we mean when we are talking about digitization and transformation? And it's a big one.
Yeah, that's a very hard one. The reason it's hard for me to say is because personally, being very private, I feel like digitization has exposed a lot of people. Not a social media fan, but digitization has actually exposed, people's identities and all of that. But I think we already live in a world where there is a lot of digitization. The reason I say that is because I'm trying to think of my life here and my life in another country like the DRC, right? I'd wake up in South Africa. I could have a smart home, for example. Shower's going to go on. Do all of that from my app. So it starts with an alarm, wake up, shower goes off. I shower, I get dressed. The Uber comes downstairs, picks me up. My flight is booked. I get to the airport. A cab is booked already. Takes me to my destination. I used an Airbnb to book. And I just get there and everything is set. So that to me is already a very high level of digitization, which a lot of people in other countries are not used to. I mean, in other countries, you'd have to wake up. Perhaps there's no electricity, so phone alarm couldn't go off. You go down the stairs once you've showered. You have to literally stop a taxi by the side of the road, get into the taxi. You get to the airport, you couldn't book your flight online, so when you get to the airport, there's perhaps no flight. So I think we already live in a world where, to be honest, digitization to me, this is enough. I don't think we should do more than this because we're going to get to a point where, we won't be able to control it. Yeah.
I mean, I think my view on it, it's interesting how we use the words differently. I mean, in my understanding or the way I understand digitization to be almost like that transfer from analog to digital, for, accessibility and automation. And then digitalization for me becomes more of, it's not about just building an app for me. It really becomes, how do we reimagine, how do we re-engineer, how do we re-evaluate our current strategy? So it's not sitting at an operational level, it's sitting at a strategic level. And digitalization becomes like a strategic principle that you use to actually transform business models and business processes, enter new markets, enter new revenue streams. So it's something that becomes super, super strategic. And it for me does extend more than, just building apps, but having a strategy that you work through that could actually potentially transform the way that you do businesses. I mean, we see it a lot where, like Google, for example, something started as a search engine, transforming to, whatever, like a big tech, one of the biggest techs, which was an initial search engine. I mean, we see companies like Booking.com that started as, booking companies, but now because they're so cash heavy, they are transforming into banks now. So it really is more about looking at your business now, looking at the opportunities, leveraging technology to actually change your processes, change your strategy, and change your business model.
And I suppose that would be a good time for collaboration then between a fintech and a bank, where they can actually use those opportunities, and where you're not positioned as a traditional bank, you could use the fintech's abilities to do that. Because at the end of the day, the money all kind of like flows in one direction anyway.
Paul, I'm going to have to jump in here. We've really gone way over time for this panel. Yes, so sorry. If there any more conversation,